Market chameleons, and soon to appear my favorite chameleon, Dimitri Pargamonic. How you doing, Dima?
Good morning, Will. How are you?
Yep. For all those who tried clicking on our email and the link was an issue, unfortunately, our MailChimp service, I think, may be having some problems this morning. Hopefully, you're able to find your way around and get to this morning's morning show. Dima, you want to do the disclaimers first since it's up and running?
Yep. So good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's a disclaimer.
All right. So what do we have going on this morning, my friend?
So I think we'll continue on looking at earnings since we're kind of right at the beginning of the earnings season. And we'll take a look first at pre-market, what's moving in the pre-market. I'll go to the upcoming earnings. We'll take a look at what's so far, kind of what happened. Some stocks already started reporting. We'll take a look at it from the perspective of how the stocks reacted to the earnings versus, what was expected. And if there are any questions along the way, let me know. We did some examples yesterday. We put up, I think we did a straddle, put up a straddle. We talked about credit iron condor. So if you have any questions, Will, let me know. You guys can put questions in the live chat. Will's monitoring that. He'll let me know when a question pops in, or we're putting in a link that could take you over to the Zoom. And when you go to Zoom, you could raise your hand. This way we could hear your question. We'll turn you on live. You don't need to put on your video, but we'll turn you on live. You could ask us the question, guide us to where you're looking. Sometimes that's a better way to ask. So with that, let's just get started quickly with the pre-market, and then I'm going to move on to earnings. Sound good?
Perfect. Yep.
So these are stocks that are trading in the pre-market hours. We have the most active stocks, the biggest percentage gainers, biggest percentage decliners. I see 216 made our percentage gainers list, 49 on a percentage decliners. So from that perspective, right now we look like, pretty good at the open, a bullish bias at the open. Let's take a look at, I'm going to filter out S&P 500 stocks just to get a picture of what's going on there. So I'm going to use this filter here in ETF, drop that down. The first one is SPY. So these are going to be components in the SPY or S&P 500 holdings. So I'm going to use that filter by clicking like this. And let's see here. One second, let me refresh my screen here. And try that again. So S&P 500. So here we got 40 on the percentage gainers list, 2 on the percentage decliners list. Again, looks like a pretty strong, opening here, pretty bullish at the opening. There are no questions, and I do see a couple E's here. So these E's alerts are saying that these stocks reported earnings either today before the market is open or yesterday after the market closed. So when we see that little E there, that means that it could be reacting to an earnings event. And another way to do that is here you got these filters here. We could just say has earnings. So this filters it down even more by showing us in S&P 500 and has earnings. So here are the biggest movers here on earnings in S&P 500, UNH, Bank of America up 2.6, Morgan Stanley, Citigroup. So a lot of bank stocks right now reporting. DPZ, I believe is that Discovery? Oh, that's Domino's. Sorry, Domino's Pizza. That's down 4.5%. And we got 11 more over here. So again, right now we're just entering earnings season. I'm going to go over, take a look at, what's coming up on the earnings front and kind of take a look at what just reported and, how those stocks reacted to their earnings event. No questions, Will, so far?
Nope, but we do have a couple of new subscribers who've joined the morning show for this first time. For those who are new, welcome.
Welcome.
And feel free, I did put the link as Dee mentioned, to the Zoom meeting at the top of the chat. If you click over and have any questions about the Chameleon, you can come on live and ask us, and we will help you out. So,
right. So it could be, about a Chameleon tool, market Chameleon tool. It could be about, some analytic or data. If it's a general question that you've seen something, unusual you didn't expect, or, something on the report, on the options chain, wherever, you could ask that by putting your question in the chat or coming over and asking it live. But again, we do this show to try to help you guys out as much as possible and to kind of answer questions along the way. So while we don't have any for now, I'm going to move on to the earnings report. So here up top, I'm going to the earnings menu, and I'm going to click on here, upcoming earnings. And really, we got 4 tabs up here. All right. And yesterday we looked at the second tab, and this we talked about, these are stocks expected to report earnings in the next 2 weeks. So we got this full list. Right now it's organized by the ones that are, by date. And I'm going to come back to this one, but it's telling us what is the straddle, option straddle, predicting the move. And then we're comparing that to historicals. But before I get to that, let's just take a look at the most recent. So I'm going to go here the last 2 weeks. And I'm going to slide down here. So these, are reporting right now. So we don't know the full move yet. But here we see JP Morgan, INFY, BLK. They already reported. So yesterday, JP Morgan reported before the market opened. So it had a full days of trading, just like INFY. Here's October 12th. So this is kind of a snapshot of what happened based on what the straddle was predicting the day before versus the actual full day's move of earnings. Okay, so here in JP Morgan, we see that the straddle was implying a move of 2.4% in either direction. Okay, so that's what it would have cost you to buy the call and the put. So remember, that's the premium that you pay for both. So the stock has to move by that amount up or down to cover the entire premium of that straddle. So in the morning, it opened down less than 0.5%, 0.4%. But then what happened was it continued to decline throughout the day, and it finished down 2.6%. So if you held on to the straddle, right, till the end of the day, right, and I don't know, in the morning, you could have done something in the morning, but let's just say till the end of the day, held on to the straddle. From the previous day, it appreciated 23.5%. So for a full day, that from the long side, it was a winner. From the short side, it would have been a loser, holding it all the way to the end. And that's because you could see here, after opening, down less than 0.5%, it continued to drift lower the rest of the day. INFY, this straddle was implying a move of 4.7% in either direction. So what happened? It gapped up in the morning, 3.5%, and basically, and that's where it ended up at the end of the day. So it didn't really have any drift. What happened to that straddle? Well, if you bought that straddle, by the end of the day, it lost 26% of its value from the previous day. Okay, so that's how we're reading these the most. And you could see here, this lets us know the industry. So if we see any kind of patterns here, so far it's pretty, maybe packaged food, 2 of them in the packaged food, but 2 in the beverages. So not a lot of stock, not a lot of patterns. And you could also just, if you wanted to look for a specific, let me see, I don't know if in industry could do it this way, right? So let's just take a look at a couple more here. So far from the long side, JP Morgan was a winner, BLK, airline, Delta Airline, SGH, and these were the straddle losers. Basically, if you bought that straddle, held on to it to the end of the day, it ended up being a loser on these. So this is quickly just to get a sense of the most recent earnings, the reactions to the most recent earnings, right? And how that straddle performed. So if no questions, I'm going to come up with what's coming up on the earnings front.
We did have some questions to think about. I think it was, let me get the right question. Trevor was asking, based on open interest and unusual option activities, is there a way to determine which way earnings could go? I know there's no exact science to determine which way earnings could go, but could you glean any insight from open interest and usual option activity, I guess is the question, going into an earnings event?
So when we're looking at, options volume and open interest, that it's certain data points that tell you something, but there's no data points to tell you the outcome of something, right? So we don't know what the outcome will be. We just kind of can look at the trades and the open interest to see how people are positioning themselves on which strikes, how much premium are they paying, and we could decide based on historical benchmarks, maybe, are they paying more premium than usual, less premium? Is there more volume than usual, or is there more open interest? But there's no way of knowing the outcome of an event before it happens, right? So I think a lot of people, and I get this question a lot, it's kind of weird to me, that people are more focused on not, the outcome, predicting the outcome instead of the probabilities or what they think is more likely to happen, right? So think of it this way: when you go to a casino, a gambler tries to predict the outcome, right? Like if you're betting on a roulette wheel, right? Well, you're not thinking about probabilities, right? Or, is this a good edge, or is this a smart bet? What you're trying to do is predict the outcome of a random event, right? So if you're doing that, if that's your mentality, it's very hard to break. That mentality is very hard to break to get a person, because a trader will think, okay, the outcome is unknown. Nobody knows it, because if there's a way to know it, then it would be easy. It's like pretend, what is an outcome? If I could call the New York Stock Exchange and tell them, can you give me tomorrow's prices? Then I'll know the outcome, right? Then it's very easy. I'll know which stocks I should buy or which stocks I should sell, because I already know what tomorrow's prices are. Just like if somebody told me, before you spin the roulette table, is it going to come out red or green? Well, if they told me that and I know the outcome, then it's easy. But we don't know the outcome. Just like I don't know the outcome of a roulette. I don't know the outcome of a football game. I don't know the outcome of, if the real estate market or the oil prices. So what we lose, look at the data to help us along the way to make smart decisions or better decisions. And that's very hard, especially somebody coming in. It's the gambling mentality that makes you think, I need to know the result, the outcome, right? And if you're thinking that way, it will be hard for you to really use any kind of data to help along with decision making. And I'll give you an example. Like, I'll go back, because maybe some people are from Interactive Brokers, and it's saying, you're coach, you're a football coach, and you're on a 40-yard line, and you're like, shit, it's 4th and 1, right? 4th and 1, and you have to decide, should I try to kick a field goal or should I go for it? So you don't know until your kicker kicks that field goal. You don't know if he's going to make it or not, right? But you could kind of take a look at the historicals and say, hey, he's like 90%, 90% from 40 yards, or 45 yards, whatever. And then what about first, if I'm 4th and 1, what is my conversion? Maybe it's 70%, right? So now you have more and more data coming in to help make your decision. And then that's not the only data, and we talked about, well, you got to take into consideration, well, if it's very windy, then maybe now you got another piece of information that maybe you shouldn't be kicking the ball, right? Or what if I gave you another piece of information and said, well, look, you're down by 2 points and there's only 1 second in the game. Well, then going for first doesn't make any sense. Then you're go. So the more information you're using, the better decisions you can make. But as far as knowing the outcome, if that's your goal, to try to predict the outcome, and not make a good, rational, logical decision, you're going to be disappointed, because really it's just like a gambling mentality, very hard to break. And, I would say no. If that's what you're looking for, you're not going to find it. The outcome you won't find in the data. There's no piece of data point that says tomorrow's price is going to be this, or the market's going to go up tomorrow, or it's going to go down. You're using data, just like I showed you, to help make good, rational decisions. That's what you're.
And those 2 data points he's talking about are data points people do look at, as well as lots of other data points.
Exactly.
To start to build a picture. Open interest and unusual option activity.
And those are very important data points, but you have to know how to use them, right? It's like knowing how to use them is important. And when you know how to use them, it's also using them at the right time and matching it up with the right thing. So when I say knowing how to use them, for example, if I have a data point, oh, my kicker, like I said, is 90% from the 40-yard field goal, right? From 40-yard distance, that's good to know if I'm in a situation that I need it. If I'm 40 yards out and I have to make a decision, should I kick it or not? If it's 1st and 10 and I'm on a 20-yard line, I don't need that data point, right? It's not useful to me right now, right? And it's the combination of data too. If I'm on a 40-yard, if I'm on 40 yards out and it's 1st and 10 or 3rd and 10, I don't need that data point. Or even if it's 4th down, well, how much time is left in the game and how much am I behind? So it's knowing how to use the data the correct way, because I think people kind of think about it as the data point. There's one data point and it's just going to tell you exactly what to do every time. It doesn't work that way. It's knowing how to use the information and data correctly to assist you in your trading. And that takes experience and education. And, I think that, people want to skip that part and go straight to execution. I might actually do a video, about here. I'm going to show you. Should I do a video on this?
That's awesome.
And I'm saying this to help you guys, honestly, to help you out, because if you want to gamble, you don't need market. I don't care. You don't need MarketChameleon for sure. Because you could go to the casinos and do it. You don't even need the stock market. So I kind of, my brothers tell me, Dimitri, my brother works with us. He's a programmer. He's like, Dimitri, I've never heard anybody who discourages people from buying your service as much as you do. But I tell them, because if they don't need it, why am I going to tell them, to get it? Because if you just want to, if you want to find something that predicts you the outcome, or you want to gamble, you don't need MarketChameleon. It's a waste of time. But I'll show you here. Let me see if I can put up a notepad.
Just so you know, we have a live question that came in from.
Okay. Yeah, I'll take the live question.
It's actually the doctor, and I don't want to lose an opportunity to get the doctor on. I know all the chameleons enjoy Jake, who just a little plug. We're doing a show on Monday with Jake at 10 a.m. This coming Monday. But he was asking about different things he looks at going into earnings, and he had some questions. So let's bring him in.
Yeah, let's do it.
All right, Jake, here you come. Jake Kilby, aka the Doctor Chameleon. How you doing, Jake?
Hey there, guys. Can you hear me?
Yeah. Hey, Jake. How's it going?
I'm really well, thanks. Hey, really enjoyed that example with the NFL. I was saying to Will, I'm a diehard NFL fan. So anything related to game theory or sabermetrics or stuff like that around statistics and games is awesome. The question I've got is regarding BXMT is the ticker, which is Blackstone Mortgage Trust. And this is a position that I found using Market Chameleon. And I just wanted to get your, and I've put I've done my research and I've put it on the Discord with the way I'm interpreting it, but I just kind of want to get your opinion specifically around volatility.
And which one is it again? The
BXMT.
BXMT?
Yeah.
This one?
Blackstone Mortgage Trust, correct.
Okay.
So if you look at the activity around, if you look at the options activity yesterday, you had about 78% calls and about seven times relative normal volume. And you had IV, I think it's about 20%, relatively low. And so I actually digged a bit deeper and looked at the January 21 expiry. You see 5,000, see that 5,100 contracts there? And so I looked at that and I thought, okay, I'm going to look at 2,000. Exactly, you're doing exactly what I did. I clicked on that. But before you do that, on the delta side, click on the IV for me. You know the delta column there? Just click on IV.
This one?
Yeah,
IV chain?
yeah, that's right. That's right. Perfect. Exactly.
Okay.
Now I interpret that as, you know, as you guys mentioned, you've kind of got a buy and a sell side. So it's almost impossible to tell really. But I see something which is low volatility or low relative volatility, around 20%, 30-day at the money IV, and it's increasing slowly. It's the stock's got earnings, I think 27th of October. When I see that plus 1.2, I get the impression that it's more of a bullish setup than a bearish one. But how do you interpret that, particularly between the strikes? You've got plus 0.6 on the lower side and plus 1.4. How, when you're looking at that off the fly, what would you think to yourself?
Well, you know, obviously the implied vols are increasing. So to me, just really quickly showing you what I'm seeing, you know, because I'm seeing calls here, puts, I would have to see the trades. So the volume alone doesn't tell me as much as when I go dig deeper and see like, what are the trades going on?
That's the next step. Yeah.
Right. So here are all the trades, right? So I see 142 different trades on this line and, you know, $210,000 worth, pretty significant amount. I see that the open interest wasn't that high. So prior to this, so something new might be going on. You know, it doesn't look to me like it's just people closing. And then, you know, I could scroll through here, or I could sort by quantity just to see if anything sticks out in quantity wise. And the trade conditions I look at is if it's auto execution, if it's intermarket sweep, or if it's a regular trade, that means that this trade wasn't tied to anything. It's not part of a, you know, spread, or it's not stock contingent, so it's not part of a hedge. This is just a straight, you know, person put in an order, right? And here's how I'm looking at it. Here's the market before, the day before, 55.70, right? And here's the implied vol, 15.5, 17.9. Now I see, you know, the stock increase, implied vol increase. So now I'm looking at the bid, the implied volatility bid is higher. See 17 instead of 15.5. The offer increased as well. So this is telling me that there are more buyers of options than sellers, because the broker dealers, right? It's like supply and demand, just like stock. If there's more buyers of stock than sellers, the stock starts moving up. Same thing, or down if there's more sellers. That's how options work. But we measure by implied volatility, because obviously an option could move up just because the stock's moving up as well, right? Because if you have a call and the stock's moving, it's a derivative, will move up. But what we want to know is the relative premium moving up, right? Is the premium actually moving higher, you know, than it should, right? Because it's not decaying. Like, where would it be? You know, where would this option price be if the premium was lower? So here it's telling me that there are more people lining up to buy it than to sell it. So more buyers than sellers. That's kind of an indication there. You know, so I'm like, okay.
So what I kind of, I got the same kind of interpretation of the data. I went one step further, and I actually looked at the historical run up into earnings, because I know that this stock has, or the underlying, has an earnings event on the 27th of October. So I try to link the two together to try and build that narrative. And my guess, looking at the most recent earnings plays, is this is probably a long position trying to profit from a run up in volatility and potentially, you know, price appreciation into the earnings before it fades, kind of thing.
Right, exactly. So what you're seeing here is potentially, right, and this isn't, you know, it's not a huge, you know, these aren't huge right now numbers to me, like, but you know, it's definitely run up more than, you know, it's been more positive than negative, you know, more frequently it was up than down. You can see these are the frequencies of up moves, you know, 2 weeks out, 1 week out versus down moves. And on average, they eked out gains. So definitely to me, it looks like heading into earnings, you know, on average, it was there's appreciation positive, not, but these numbers, you know, they're not that huge, 0.5%. The highest 1 week out, you know, even, but let's just take a look. Let's come back here on the options chain, because this is also going out into January. So they're going for the longer dated ones, right? So
yeah, but that's
this might be,
they want to cover the earnings period, right?
Yeah, they were covering the earnings period. This is 4.3% away. So it's kind of, you know, a nice distance away. So it could be both. What they're doing potentially in front of earnings, maybe getting some bump ahead of earnings, you know. Also, we see here that the implied vols are 17, you know, let's see. So on average, the IV they paid is 17.4. I'm just going to take a look at the stock volatility. How's the stock behaving? And we see, you know, 52-week average 26, 20-day average. This is realized volatility, 18.7. So you're getting a discount to the realized vol. That could be another, you know, potential there that they're looking at. You know, so let me see what the high of, you know, 52-week high is 33.8.
I had a question for you, Dimitri. If that volatility on those 2,926 contracts, if that IV in that delta column was like -3 and in red, would that signal to you that these guys are potentially selling calls against something, or you've just got no idea?
Yeah, exactly. Yeah, well, if the IV was coming in, then I would say, I would think that there's more call sellers, right? So here, and what you usually see is that if you have a high open interest in the stock, so this is today's open interest, it changed, you know, because of this, but what you usually see is if there's a high open interest and the stock is drifting toward it, you see the implied vols coming in because, you know, people are either selling out or buy writing, or, you know, that's kind of what you normally see. Here, you got the reverse for buying it. You know, I'm looking just, you know, I'm trying to go through a lot of data in my head while we're talking. You know, I see that this is a mortgage company, so it's interest rate sensitive. It could also be something, you know, I don't know what they're doing, if increasing interest rates will be good for them or bad. You know, I'd have to go and look why this scenario is set up. You know, I'm looking at volatilities, I'm looking at, you know, other things on the board. You know, let me take a look here. You know, here's the 33 line. Are they selling?
I guess you've got that potential. It's a potential dividend play as well, isn't it? I don't know why it's not showing up as a D on the column there, but it's got a dividend, I think, on the 27th of December.
Does it? I'll take a look at it. You know, so the 27th of December. Yeah. So we didn't pick up a confirmed one yet. I'll take a look at it, but definitely, you know, a lot of stuff to think about. I'm seeing here. This looks to me like there's also, you know, you've got two expirations to me that look like that they're buyers coming in. All right. Here, let me just take a look at what they did with these puts. So on the put side, you know, I see the implied vols also, the implied vol just kind of went up in general on this, you know, in this expiration. And, you know, it's hard to tell, like, if this is one person really bidding it up, you know, because I see broken up trades, but happened very quickly. You know, this could be somebody really just, I'd have to look at it closer, you know, if it's coming from a lot of different people, but it looks to me like just the way I'm seeing these trade, you know, that it could be maybe potentially, one party doing most of it, because it looks, consistent, like, they're, happening very quickly at the same, even though it's not one trade, it's kind of like a broken up,
Sure.
it's broken up into pieces. So I'd have to look a little bit closer. We didn't have enough time. It's interesting, intriguing. I would take a closer look to see what's going on, what the thesis might be behind it. Is it an interest rate? Is it something to do with, Fed tapering? Is it interest rates increasing might be good for them? Have to take a look at what the thesis might be behind it. Is it just a run up into earnings? But again, I'm just trying to quickly start looking through the data in my mind, but I would say I'd have to look a little bit closer as well.
Okay.
Let's just take a look really quickly at the open interest. I'm just curious. So a lot of it is in October right now, so we see here pop in January, more puts actually than calls, than here in May, April. So it could be people rolling from October, because you got a lot in October. Look at all those calls. Somebody just might have that position on that. They say, okay, it didn't work out in October, right? Let's just take a look in October. So
There's
here in October, they got.
There's no way I can identify rolling by looking at the order type, right? Auto execution.
No, because they're not. They didn't do it as a calendar spread. But you could see here, look, a lot of options that are going to probably expire worthless on the 35 strike. A lot on the 40 strike. 3,600 there. Right? Yeah, and it could be, that's what they're doing, is saying, hey, it didn't work out. I'm going to give it another shot up here, right?
Sure.
That might be happening too. So again, I'd have to keep and I'd look back at these and say, where did they come from? So for example, in October, I know the 35 strike, right? 6,000. I could take a look here and see tracking, where did they put these on originally? It's way back. So you could see they held on to it for a long time. I don't want to go back. So you could see that might be the situation here where that's just somebody had that position on, didn't work out. Maybe they're like, okay, I can't sell these right now. They're zero bid. They're going in there and buying it again, potentially. Okay. I'm trying to consume information quickly right now.
Yeah, you're interpreting data there, but that's okay.
Yeah, I'm interpreting the data here, but I would take longer and think about it, a little bit. But it's interesting.
Options executive work.
Yeah, exactly. If they pump it up, I might be on the other side thinking okay, maybe that's a sell. Maybe I want to be on the side of the market maker. That might be ultimately my conclusion as well. Sure. At the end.
We did have a question, and while you're both on, you can maybe give a quick answer or not. Maybe something we can carry tomorrow. But it was a new user, just joined the Chameleon community. Nuno, he was asking any thoughts on stocks like Crtx, which to me immediately sounds like biotech. It came up on the IV scan to him, and it says,
"Yeah, we're already after 9:30, so maybe I'll take a look at it tomorrow." But again, if I'm not familiar with the situation, sometimes I kind of can see if something is simple and obvious. Sometimes it's not simple and obvious. I have to think of it. Sometimes I can't figure it out, but I'd have to dig deeper in, and start looking.
And one of the things I know you look at is the event section, because there is an event on November 9th. So be careful doing anything in that. I'll send that to Dimitri, the Crtx, Nuno, and we'll try to take a look at it maybe tomorrow or some other time. Great job, guys. Thanks, Jake, for joining.
Thank you, Jake. And guys, stay safe out there. Have a good trading